Hey everybody, how's it going? JT here from the Ethfinance Community. Super excited today to get back. I've been gone for a couple of weeks. I've actually had a lot going on in the background of my life. Won't get into it until later. So the Weekly Doots live stream is all about showcasing the best of the best from the week of Ethfinance Community on Reddit. This is a read-along reaction series, and if you want to follow along, I actually need to put the link in the chat in the public voice channel, to be honest, because Hanniabu, who does dailydoots.com, is lost in Istanbul without a way to do it. So I'll put the link in the chat on Discord, and you can open up all these tabs if you want to follow along. So it's a read-along reaction series about the best of the best. And while you're at it, hopefully he's got the POAP ready to go at dailydoots.com. Big thanks to Tricky Troll for capturing and curating Doots every single day, and the A word for curating this beloved weekly list. As always, if you know someone who wants a piece of this action, send them my way. Today, we got Ryan Berckmans from 3cities. Hey, man, good to have you along.
Thanks for having me on the show.
Yeah, I'm so jacked to do this show for a couple of reasons. I think the little demo that we did together a couple of weeks ago is just, it's so simple and easy, and it looks like you guys got a great product. And then I brought along my Lattice one, and I fired up a second camera here. So we're going to do a live demonstration of this in a couple of different ways, and we hope you enjoy it. It's always fun to have a nice interaction with the people in the community that are actually building useful products out there. So thanks for joining us today, Ryan.
Oh, my pleasure. I was a talking head for a few years on Twitter, so it's just wonderful to get back to code and the basics.
No kidding. Well, good on you, man. All right, so we're going to dive right into our rich list. There's a Lattice. I need to move it out of the way here a little bit. Let me see if I can squish this thing down just a bit. Put it down here a little bit. All right. So our rich list it has not been updated since 2 weeks ago, but I'm going to go through it quickly regardless. Nick Sorakish, also in Istanbul, at 52. Hanniabu in Istanbul is at 58. Scientist at 59. K-Brod at 60. Set one less at 64, 696 underscore ETH at 68, although I think that number might have changed. But I'm not going to look. We'll wait till Hanniabu gets home and get it next week. Tricky Trolls at 70, Crypto Currency at 83, Logri the Bard climbing up 84, Superfizz at 130, although Superfizz, he's been back and he's been posting more, so he's been making that list because he's been dropping lots of great information on Ethfinance. So I'm sure his number is much higher than that. Let's see, that looks like a Twitter page there. All right, we're going to go straight into the Trinity. It looks like hour number 4 chimed in 11 hours ago. Ethereum. Bart Hibb, it says Web3 backbone. Frank the Tank had 0.57 on the ratio. That was a meteoric change, wasn't it? Alexis Kef at 2109. Bago Gel says 421 days since the merge. And then 2111 reported by 5 Quat. 696 says 2112. Our number 4 drops a YouTube link. I have no idea what Rush's song 2112. Very, very slick. And this is interesting. Uses Bing Video has been recording the number of hodlers that are subscribed at 88,482. And it looks like yesterday had a ton of views, it looks like, and we had a lot of comments. So for anybody that says Ethfinance is dead and the bear market killed off everybody, just watch what happens when that price spikes up. They're like all these lurkers from under the ocean show up again, and they're always happy to chime in. All right, moving on to let's see, what was this one? I'm getting confused because I don't have my normal thing. Oh, the trade. Ooh, this is a new addition. That's right. AB 111292 it has been tasked with posting some trade information. So T1 is at 2050, T2 at 2150, T3 at 2500, trailing stops and compounding along the way. Don't overtrade and let the chart setups and high conviction plays come to you. And remember, price doesn't move in one direction. There will be pullbacks. Set your risks and your SLs. Is that stop losses and invalidation of your trade thesis while you're wrong based on technicals. Good luck and have some MF fun. All right, so this is going to be a new addition. You guys let me know if you want to keep doing this because after all, we do have traders, not just holders in Ethfinance. I know that may come as a shock, but there was a request. Hey, if he wants to post some trade activity, you know, what you guys could do is you could put it on a calendar along with the chart and see how the paper trail goes there. So, all right, AB 111292, we're going to start adding you to the weekly. Moving on to our haiku of the week by J.S. Tears. The whole world saw it. Mainstream culture includes ETH. The Simpsons did it. The Simpsons did it. They had an NFT episode recently. They actually sold NFTs, if I'm not mistaken. So J.S. Tears, how does he do it with the haiku of the week? Thank you so much. And moving on to our shit post of the week, because we always like to save the best for first. Laughing my ass off, BlackRock. I ain't giving you my yield-bearing ETH. The higher you pump it, the more money my node makes. You may keep your shiny pet rock Bitcoin. And F Maxi Tard replies, I love this. So, Iter ad Astra with our ship post of the week. All right, ladies and gentlemen, we are going to pivot to our guest. This is Ryan Berckmans from 3cities.xyz. If you want to head to the website, we're going to try to do a demo here. But the tagline he told me after, if he were to have a few beers, would be, it's a decentralized payments for Ethereum. And he might say, it's kind of like Stripe for Ethereum. So Ryan, thank you so much for joining us today. Walk us through, we'll get to 3cities in a second. Where have you been? What have you done before this moment? And how long have you been with 3cities?
Oh, fantastic. So, you know, I think big picture, I've been in the Ethereum community for about 5 years. I studied computer science a while ago. I've been told I have a youthful visage, but I'm actually a crypto boomer. So I'm in my late 30s.
God, you
two
look
young
good.
Children. Well, thank you. I'm gonna keep working on that. You know, I think the bull market you'll see me gaining a few pounds. I'm eating chicken wings, watching the charts.
Suck it
But,
down the Mountain Dew. Yeah.
Yeah. Oh, it's brutal. The bulls are so much harder than the bears. The bear's great. Like, get out, touch some grass. The bull, it's like that Clockwork Orange episode, or
Right.
that segment where the
Yeah.
eyes.
The bears are like, this shit ain't going to build itself, you know, better get to work.
real.
And it's like, you keep your mind occupied. You stop freaking out about the endorphins of a price riser. It's not what people, I don't know.
It's not normal, man.
It's fun for a second. Then you're like, I don't want to sell.
Yeah, you don't want to sell, and oh man, wait, it's like Disney World, but you can't go back anytime you want. You need to make the most of it. You kind of feel like should I be enjoying the ride? Should I just be studying the map? I feel anxious for the whole bull market. It never goes away. I don't sleep well.
So so computer science, and then what was your first project you ever did in Web3 that actually made this thing called money for you, a job?
Oh my goodness, money! I'll let you know. But the first project we did was Predictions Global. So a friend of mine and I we made an information site that by today's standards would be like a little tiny info site that you'd post it on Twitter and someone would say, "Nice job, man," whatever. You know, nowadays there's 1,000 info sites, so many ways to get all this amazing data out of these cool machines we're making in the sky. And but back then there was almost nothing, like 5 years ago. And so Augur is a prediction market where you can use it for, like, you can bet on things, bet on elections. It was one of the OGs. It was one of the biggest ICOs in history.
Yeah.
And they spent a long time making their decentralized betting technology. And at the time, there wasn't good application infrastructure to pull the data out of the chain and make it available to people in ordinary websites. So we built one of the first sites to do that, where in our server in the cloud, we ran a copy of the Augur node. And then we did some munging on that data and presented it into this nice mobile friendly prediction market interface. And we had this idea that we sorted it by default by most recently updated, so you could check it like it was crack because it was constantly changing. Because and people just loved that. And it was the most famous thing I ever made. It was actually mentioned in The Economist.
Nice.
Just one word. And
You,
so
you're like, hey, look, mom, I made it. Right? Did you frame it? Did you put it on the
absolutely, I
right?
didn't frame it, but I
Did you
framed it
go?
in my mind.
Did you go to Barnes and Nobles and like buy every copy they had? You know, you,
Yeah, for sure.
you hand them out as like gifts to your children. You know, this is your dad. They're like, I don't want that, dude.
Yeah. I got mentioned in the only real newspaper left that actually does the news.
Right.
But
That's even more reason to frame it.
yeah, for real, it was fun. It was a fun era, and we sold the site, but like for like pretty much zero money. It was more like a beloved kumbaya type acquisition. The startup that bought our site got shut down. Shut themselves down when they sort of gave up really early into their journey. It's kind of sad for them. But I went on and joined the Augur Core team for about 6 months, and then after that was done, I just sort of spent the next few years on Twitter. I was an ecosystem researcher, which is kind of like an influencer that's bookish, where I wasn't a very good influencer, nor was I a very good researcher, like the base layer people who do the serious nuts and bolts research. But I kind of did both, where I would go out and I would read pretty much every major press release by every single application. I got to know the app layer really well, and I used that to publish predictions about where the space was headed, both like price technicals about like price expectations and why certain tokens would do better than others, and not like technical analysis, like business stuff, where I'd figure out, this group had a good business model, this group has an edge, this group doesn't really have an edge. Uh, Very much an ETH bull. And then after a few years of that, I just thought, hey, I wanted to get back into building. And for me, I knew that, I was, I'm a crypto boomer. I'm too old just to take a swing at the plate with a shit idea. I need something that I know is gonna uh, uh, be really useful to the community. And so I spent years just waiting for the right opportunity. And there were a lot of good ideas that came across, some of which now are large startups run by the right people, but they weren't right for me personally. An example is a lot of the L2 infrastructure my research group and I saw coming, but we're not, I'm not really an L2 infrastructure kind of guy. And then a while ago, I realized, whoa, how are we going to do payments? What are payments going to look like? And I started thinking a lot about that, and that's really what led me to 3cities. And I've been working on it now for a little less than a year.
And so, how many people are on your team?
Well, it's just me now, myself. I do the product design, the engineering. I do everything. But we're raising our pre-seed now, and I've identified the first person I'd like to hire that I just think the world of, that I think would be a great doubling of the team from 1 to 2, and we'll go from there.
That's fantastic, man. I love it. And what is it about having kids that keeps you grounded in like finding actual use cases? Because ain't nobody got time to do too much pie in the sky stuff. Like, we got to feed some mouths around this house, And so I think it's fantastic. Everybody wants to look for a use case for crypto, and this is a very easy one for people. It was easy, it's really intuitive to use and operate. I'm sharing my screen on Discord, and I'll switch my Zoom feed here. So if you want to follow Ryan on Twitter, he's at Ryan Berckmans, all one word. And there you go. You live in the Cayman Islands, or at least that's what you have listed there. That's fun. And then 22,000 followers, and we're so glad that you're able to get here. Before we do the live demo, I was going to see if anybody in the chat wants to ask any questions. I'm a very like up here kind of guy as far as like introducing guests, but I do. This is what's beautiful about this show is if there's anybody that wants to unmute and ask a question, feel free. Otherwise, we will move into a demo. All right, sounds good. It's usually pretty quiet, Ryan, mostly because of the time of day and a lot of people are at their jobs, so they can't let their bosses know they're listening to a crypto show. They'll get fired immediately.
Yeah.
And like,
Yeah, not a joke.
it's no joke. It's worse than porn getting caught with that, So here we go. Let's walk me through this here. So I'm sharing my screen. I'm going to go ahead and turn on my or make my lattice a little bit bigger here. And okay, so you were saying let me just refresh the page here. So right now I'm going to send you a pay link. Is that correct? Or you sent me a link already. I need to get that
Great.
link back open.
So in this demo, we'll do.
Here it is.
We'll do. I'll pay you, and then you'll pay me, or you're going to pay me first, and then I'll pay you.
Yeah, I'll pay you first. So what it is there's a pay link that got sent, and we're sitting on Arbitrum 1. I'm going to hit pay now, and then I'm going to sign in MetaMask. One single die. Don't spend all that in one place, please. I'm going to hit confirm. And then on the lattice, it should push over to the lattice. Oh, looks like I got to put in my pin. Well, I'm blacking out this screen. I'm not letting you guys.
Maybe don't share that one publicly.
Yeah, my luck, huh? Okay, let me undo that. Okay, I'm gonna reject it. I want to do it all now that I'm unlocked.
Cool.
Okay, we're gonna do it again. I'm gonna refresh the page. I'm gonna send one die. I'm gonna sign on MetaMask, and it pushes to the lattice. And there you can see the contract address, the transfer transaction, or the address it's going to. I hit approve. And away it goes. Now on my screen, I got a QR code here. All right. So explain to us what this QR code is. This is just a receipt that could be shared to other people in case of bookkeeping or whatever.
Absolutely. So that's the Block Explorer receipt. Let me see if I can go ahead and scan it there.
Okay. And then I could also hit the share link.
So I was able to scan it on my phone, and I got the Block Explorer receipt.
Oh, that's fantastic! If I click share receipt on my side, it copies the Explorer link right there. That's fantastic. Okay. All right. Yeah, there it is. Okay.
Fantastic. So
that was perfect.
In the next phase of the demo, I'll pay you $1, but between those, let's talk about some of the magic going behind there and kind of like what makes the sausage. So we're all familiar with Stripe, PayPal, Venmo, Cash App. There's a lot of international apps the world over that have really slick payments. So when we think about like crypto payments, what are we looking to get here? Well, one, we want it to be decentralized so that we don't have to trust middlemen anymore to run our payments. Like when I download a cat picture, that cat picture downloads basically peer-to-peer from the file server to my computer. I don't have to go and request from some gatekeeper whether or not I have the right API key and the right setup to get that cat picture. It just kind of digitally native goes directly to my computer. Well, now we can do the same thing with money. Which of course we've been doing for quite a few years with like direct transfers and DeFi positions. But what we need to get to catch up with Stripe and PayPal is one, we need really good UI and user experience so that it's just a pay now button. It just works. All the little crypto edge cases, changing your network, adding the network, picking the token, picking the chain, any kind of wallet errors, gas price. There are all these little things in crypto that make it what it is. They just got to get solved. So it's just like the PayPal Pay Now button. That's kind of the first thing.
Like the fewest number of clicks.
Fewest number of clicks.
With
and
the
at
most
3cities,
security.
Right, with the most security. And we've done a lot of work to minimize the number of clicks. So there's actually like custom code that tracks if you've already clicked the button. And if you've already clicked the button once, it'll actually skip prompting you for different steps that may occur. So minimum number of clicks is absolutely like a North Star for us. And so the first thing we do is we try to make it as delightful and low friction as PayPal or Stripe, but with that decentralized security and neutrality, so anyone can use it without worrying about getting rugged, either as a payer or a receiver. But the second thing we do is in Ethereum, as a community, we celebrate obviously like diversity, where we have lots of wallets, we got lots of tokens, we got lots of chains. We even have a few different currencies, Ether, US dollars, Euro's Ryzen, Euro stable coins. And so a common criticism of Ethereum right now is, how are we ever going to do anything simple with all this fragmentation of tokens and chains and so on?
Yeah, like
so
network switching is a pain in the ass, for the average user. It's just like, okay, what am I now? It wants me to do what? It's hard.
Yeah, it's a huge pain in the ass, and the further along our ecosystem gets, the harder it becomes to solve these problems, because there's more fragmentation, more growth. And so you switch network, and then your buddy says, "Hey, all right, can you pay me $5?" And you're like, "Oh man, I don't have any USDC on L1 or USDC on Arbitrum." But did you even realize that you have 5 DAI on Optimism, OP mainnet? You didn't even know. So we want to help folks out with that. Or maybe you didn't realize that you had $5 in Ether, and your buddy is totally fine getting paid Ether instead of stablecoin. And so 3cities just puts a nice paintbrush over all that. And so at the moment you connect your wallet in 3cities as the person paying, we actually go out and we do a scan of your wallet using ordinary ETH RBC access. So we're not using any centralized application infrastructure, like or application infrastructure that reduces neutrality. Like, there's all kinds of great projects that are helping folks get data out of the chain, like Dune Analytics, like the Graph, like certain Alchemy software as a service, custom APIs. These guys are doing a great job, but it is a reduction in neutrality. It adds a centralized point. If you want to provide the most neutral experience possible, you want to make sure that your data source is vanilla Ethereum node access.
Awesome.
And then you give people a choice of nodes, and then also you can, even for advanced users, they can bring their own nodes. And so that's how 3cities works. So all of our data comes directly from the chain. There's no intermediaries. And at the moment you connect your wallet, we go out and we scan every chain for every supported chain, which today is about 7 chains, and soon enough will be about a dozen, for every supported token. And we support tokens in Ether currency, like WETH and Ether. US dollar, of course. We support USDC, LUSD, DAI, Tether, and soon we'll support also Euro. And there's at least 2 major Euro stable coins that are getting going. And so we search your wallet for all of these in parallel immediately. The whole thing takes like less than a second. We get all of your balances back. And then given those balances, we run, sort of like a sausage making operation to determine, how should you pay this guy? What tokens does he want? What chains does he use? What do you use? So we sort of have this, it's almost like a dating problem. And so when we solve that problem, the solution it spits out, we call that a payment method. Kind of like you're on Amazon. What payment method? I'm going to use my Visa. I'm going to use my store card.
Yeah.
Well, we find payment methods of different tokens and chains in Ethereum, and then we plug them into the one-click pay button. And so when you use 3cities, that click minimizing, lower friction one-click button, that's always going to be the top payment method. But there might be like 10 or 30 other payment methods depending upon how much stuff you have in your wallet. And so that's kind of a little bit how it works. And another thing that's important to us is we know that, like, in the real world, you're going to leave the page open for a while. You might fund your wallet from the exchange. And so that whole process of finding your payment methods, it actually happens in real time behind the scenes, so that it's always up to date. You don't have to refresh the page. So we're really focused on that polish and that friction minimization.
So if you're okay, so back up just a little bit. So for instance, if two people want to pay each other, you got the payee and you got the person, the receiver. It'll analyze what the receiver is like number one hit in terms of the crypto they probably interact with the most and push that to the top. So as the payee, you can be like, oh, well, you've got this and they like that. And we're going to put that as the number one thing. And then you have options down from there. So yeah, assuming a contract or a wallet has had, let's say, the most transactions over time with USDC, it'll just default to USDC, be like, this person really interacts with that one. Am I reading that right?
Right. So you're actually one step ahead. So we don't do that specifically yet. So it turns out this kind of onion of who pays what and why is like there's a lot of layers to it.
Mm-hmm.
So today the receiver has to set their preferences in the pay link. They got to say what their preferences are.
Got it.
And then today the sender, the payer, their wallet is scanned at the moment of wallet connection and ongoing basis. But to your point, there's a lot more we can do there. So, even if the receiver says, hey, I prefer, I'm willing to accept the following 5 chains, the following 10 tokens. You're willing to accept that. Well, we can do better than that. We can, to your point, we can see which one are using most often, and we can bump that up to the top.
And do an average between the two wallets. Be like, hey, it's like, it's not AI, but it's almost like we know what you like and we know what you like to send. If you can just like mitigate that step out. So
you're just making a recommendation system on what they're willing to send. So rather than have them have to curate it, you just want to spit out something. They go like, yeah, that sounds good. And they click accept and then they're on board, right?
Yeah,
absolutely.
That's Logri the Bard, by the way, Ryan. Logri, do you want to pick his brain a little further? I'm glad you chimed
definitely. There's quite a bit going on here. So what type of payment system are you what type of payment use case are you trying to optimize for first here? Are you trying to optimize for I'm going to pay my landlord? Are you going to try to optimize for I'm going to buy a sandwich and I'm in person at a store with my phone? Are you trying to optimize for streaming payments? And I guess that's going to impact a lot of what the other support software you need around something like this is going to look like. So, for example, if I'm going to have a hot wallet, I'm going to want to have some type of policy-based control system that says this is what my normal spending behavior looks like, and this other stuff is like like an ATM withdrawal limit. Don't let me spend more than $300 or whatever in a day, right? Because the chance of error here is relatively high. All you're seeing is like a QR code, and there's not a whole lot to approve, and you're going to do it relatively quickly, and there's no takebacks. It's not like I can go to Visa and dispute the charge. This is immutable, right? And so you're going to want to have some type of policy-based thing on the spender side for this that says, hey, here's what is, don't sign anything that doesn't conform with these patterns, like a policy-based thing. Think of it like RBAC, like you're on AWS, you have your IAM system that says, here's what I'm allowed to do. Now apply that to a transaction layer, and you're specifically talking about ERC20s because you're talking about payments. You understand the interface for that very well. So here's what I'm allowed to do as a spender from this wallet with my ERC20s, and you probably want to think more about that layer to protect the spender because there is no takebacks, there is no adjudication layer. Visa has someone by the balls because they get all their payments come through Visa. And so if you don't want to treat one customer right, they're just going to withhold other payments from other future customers to you until the balance settles, right? So they can always like claw back money from a misbehaving merchant or something, right? But with this, it's individual payments. There's no pooling or anything. There's no takebacks. It's immutable. So you have to be really careful about making sure that the spends or the sends that are happening are accurate and protect your consumer, or you're not going to get adoption. The next thing is I don't see that we have account abstraction in place here. So when I'm spending like $3 at Taco Bell, I don't want to also spend 75 cents in a Visa transaction fee that goes to the merchant in today's system. You're going to have a hard time convincing people to, at least consumers on the spending side, to absorb transaction fees they're accustomed to having Visa pay on their behalf, off, right? Right now, Visa takes out the merchant's ass, and then they even give you 2%, right? They'll give you cards with cash back, and you're asking the spenders to give up credit for one, two, cash back, and three, protection, right? This type of ability to contest a transaction, right? And that's just a lot that you're asking for the spenders to give up in terms of protection. Now, I'm thinking from a very U.S. centric perspective, right? If you go to other places in the world that don't have the same financial services, something like this would be, light year ahead of what they'd otherwise have access to. So take that. That's one giant bag of feedback for you.
I really appreciate that. That's fantastic. You can see me taking some notes here on my second monitor. Let's go in kind of reverse order here. So that's a great point on what the spender is giving up. It's not all roses in the crypto system. With a credit card, you get the ability to reverse transactions and you get cash back on your card. I don't have great answers for that today. I think that's a really interesting area of future growth. I think one possible angle there is that maybe we still use credit cards for a long time, and apps like 3cities can help support payments to your credit card bill. Like, you want to pay your credit card bill, you have the same problem. It's upstream. But I think that's an unsatisfying answer, and I'd really love to explore loyalty points, cash back. I think one challenge is I know that the Visa, to your point, they had this huge power over merchants where they can cut off access if they don't like what the merchant is doing or how they treat a single customer. Using that stick, they require merchants to not give a discount for cash payments. So in theory, crypto could be a cheaper way to pay, just like cash.
No doubt. Everything that
Yeah.
you're doing is better for the merchant. Right now, all the payment costs is on the merchant, all of the compliance costs are on the merchant. Like, everything in the current relationship between the consumer and the merchant, everything is stacked in favor of the consumer and against the merchant. So could you get a merchant on this? Yes, maybe. But merchants ultimately care about getting customers, right? That's what drives their business, customers. And if customers don't want to pay in these systems, they're never going to onboard it, because it's just time away from, like, Jimmy John's wants to make sandwiches. They don't want to. Their core business model is not messing with payment systems and trying to like push some 3cities.xyz thing on their customers, right? They're not going to carry that for you. They're not like, they will support a payment method if their customers come demanding it. And I see that when you're removing all the incentives that Visa provides to the customers, no customer is going to demand this. To your other point of, okay, so now I have my Visa card and I want to get a decentralized, or I want to get a permissionless credit system, and then I want to have 3cities be used as a remittance system to basically my credit line. That sounds a lot like what companies like Nexo are doing. You put up some collateral into an account, it gives you a credit line at some fraction of your collateral, right? And then you can spend from that as you see fit, and then just repay it. And the money that you have in collateral then gets dumped into. You could do this with a policy-based system, right? But the money you have in collateral gets put into DeFi and starts earning yield somehow. So you basically have your interest-bearing account being used as a source of credit.
It's actually quite different than what Nexo's doing now. And the reason is that you asked about specialization of 3cities. So 3cities focuses on transactional payments, not pay over time, not pay per stream of content. We do sort of chunky transactional payments, donations, point of sale, e-commerce checkout. And one thing we've noticed about transactional payments is that many types of transfers and deposits are effectively transactional payments, sort of on the back end. And so a difference between what Nexo would do, where you want to fund your credit card, so you're taking a pool of money and you're allocating it to that. Whereas with the 3cities deposit transfer use case, which we don't support yet, but is on our roadmap, what you're doing is you're saying, okay, I'm trying to fund this account. I'm trying to fund this embedded wallet. I'm trying to transfer funds to an exchange. I have the exact same payment search problem that occurs between two parties, but it's sort of between my two accounts that I own myself. And so if we think about like classic payment intent systems, which are a really hot topic in DeFi today, typically the way a classic intent works is I sign a message or a transaction that says I want to swap these 1 Ether for USDC or USDC or DAI, and then a competitive community of solvers will go out and figure out what's the best way to fulfill this order. And so this sort of intent supply chain of signing a fixed input and then sourcing outputs, searching for the best way to fulfill that input, is it's a big thing in DeFi right now.
We do that in DEXs a lot, right? We say like, I want this token, here's that token. It looks kind of like a payment, but it's really just a swap, right? But but you can see the same pattern of something like House Swap, where I say like, here's the minimum amount of accepting of the token out, and here's what I'm willing to pay. And then it finds whether it's going to go over to Curve or Balancer or Uniswap or whatever, right? It provides an abstraction of what you'd say is the routing system, and it lifts it to an intent layer, right? So you specified a more general interface that's kind of abstracts the underlying implementations.
Yes, but one thing about intents is that most of the ongoing work into intents early binds the spendable inputs by the user and seeks to solve for the outputs. And what 3cities does is the dual of that. 3cities takes the shape of the output and then late binds the inputs, and then only when it identifies the optimal inputs asks the user to sign not an intent, but a narrow, concrete transaction to fulfill that specific input-output path. So,
that makes a lot of sense, right? I need to pay them $10. I don't need to pay them. I want to pay as little as I can while getting them their $10 or 10 USDC, right? As opposed to I'm willing to. Here's the amount I'm trying to sell. Get me as much as you can for it, right? So it's the
right,
inverse,
not just as little as $10, but I want to pay them $10 in some way that is palatable for everybody. The
right $10.
The right $10, the most delightful $10
That's
in the space of palatable $10.
The most vanilla flavored $10.
Most vanilla flavored $10, and this is a big deal, right? Like even something like here, I'll just give you this example. Say the spender is using an EOA instead of an account abstraction wallet, so they need to sign a token approval if they're bridging. They're in a future version of 3cities, our payment method pipeline will detect bridging opportunities, but those bridging opportunities, because it's a contract spend. In terms of you're yeeting that stablecoin into the bridge on the source chain, and then the bridge moves it to the destination chain. And there are certain, there's a subset of popular bridges like a Cross that have fast bridging, so you could settle a payment in like a minute, which I think we would look to do in this feature. Not the 30 minutes Cross L2 that you see in some bridging systems. And so if you have an EOA, then your payment method of auto bridging stablecoin to the chain that's accepted by the receiver is going to take an approval followed by the transfer. Whereas if you have an account abstracted wallet, you can just combine those user ops to get it done in one signature. And so what 3cities aspires to do is to solve this large space of edge cases and pain points, so that regardless of what kind of wallet, token, chain, currency, preferences, and use case, to your much earlier point, our core technology and our associated end user modules in terms of like UI and plumbing optimized for specific use cases, which I'd love to get into, those really connect the dots for you. And so it's like payments is a death by 1,000 cuts. It's not just tokens and chains. It's not just account abstracted wallets. It's not just currencies. It's not just bridging. It's not just multi-architectures. It's all of it. And what 3cities is going to do is solve all of it in a single system, and also not only at a protocol and SDK level, but with end user Chrome, and not Chrome browser, and end user interface where we're not just spitting out the data that represents the solution. We're actually rendering the pay now button, and we're handling all the little edge cases of, like, for example, our wrapper around, we use WagMe like pretty much every other new project. Fantastic application infrastructure. And WagMe library offers these different hooks to send ERCs and native currencies. Our button, just the button that sends our tokens, is about 1,000 lines of code wrapper around these hooks. because it accounts for all of these error states and messaging and retries and ephemeral retries and non-ephemeral retries, and so it's
You're pretty much describing exactly why Bitcoin has failed as a payment system, because it's
oh
not.
yeah,
Right?
no.
I mean, that is, as you said, it's death by a thousand cuts. That it's a lot more complicated than it appears, especially when you start getting into people not wanting the same, not having a universal currency, which is, called a paradigm it's trying to enforce. And yeah, that's just not getting built. Like those systems that you're describing were incompatible with Bitcoin in a decentralized way, right?
So like
Because
Jimmy
a lot of
John's,
logic.
Jimmy John's ain't gonna accept 3cities payment just yet, but like 5 people could split one bill with it and do it all in crypto, and one person could pay at the pump. You know what I mean? So it's like it'd be an easy way to like. It sounds like a variety of people could figure out a way to pay one person a variety of tokens and on different.
But yeah, to JT's point, it's I had never considered. I consider what's the value prop for 3cities for traditional merchants, but the way you are articulated it, Logri, where you said 3cities is only good for the merchant and not the consumer in traditional payments. That strikes me as absolutely correct, and I think a reason why I hadn't thought of it that way is that we are not going after TradFi. We are waiting for not to kind of use the cliche, but the puck to get to where we're going, which is pure wallet to wallet payments. So we are only interested in transactional payments. We're only interested in wallet to wallet. We will have embedded off ramps, but it's a pure wallet to wallet system. Why does this matter? We're not competing with Jimmy John's. We are competing with everybody else in the world that's trying to do wallet to wallet crypto payments, including any kind of deposit or transfer. You're moving money to your exchange. I mean, why did Coinbase and Kraken make us copy the address we're going to send the tokens to? Like,
Oh
are they
God,
trying to give us a heart attack?
I remember
It's nuts.
2017 where there was our Quest network, and there was this thing like I could send you a payment invoice, then you could respond with that. Remember Rec? We all had Rec Marines and everything. People were posting the altcoin daily. Anyway, ancient memory. They were trying to solve this problem then of like, why couldn't Coinbase do a pull request to my wallet? And then they could pull the funds from it. There'd be no chance of me missending it by like having MetaMask, like some worm on my computer that changes the paste address, or I just get something wrong when I'm pasting it or something. All the like, you just look at what's the percent chance of error and then what's the cost of error, and both of those factors look egregious compared to what we expect from TradFi when you're interacting with exchanges. The moment that like
100%.
the transaction is the blockchain, and I'm waiting for that email from Coinbase saying like we received your funds, it's gut wrenching.
In your
Oh
spam
my
folder.
God, it's awful. Yeah, I'm a Kraken customer nowadays because I closed my Coinbase account. They're not supported in Cayman Islands, and the new Kraken Pro interface doesn't show you pending deposits. It only shows you confirmed deposits. So I'm popping that shit back into classic mode, like looking for that pending. It's silly. So
It
this
is awful. So if you can
and-
get something like this built into Coinbase, or built into Kraken in your case, right?
Yeah.
Where we could reduce the transmission error and just make that friction look so much better for the end user. I could definitely see Kraken or these other centralized exchanges being a major customer of yours. Like, yeah, this is something
Well, thank
that
you. I appreciate
they
that.
should have built already.
And this really gets into like your next item there, which is use cases. So one, 3cities is built from multiple use cases. We do interpersonal payments. We will do some of these we're better at than others right now. Interpersonal payments, donations, e-commerce checkout, point of sale like hot dog stands, like Jimmy John's that just want to accept crypto payments, especially like crypto conference booths and food trucks.
Jimmy John's
Little bit
not
of
a
feature.
sponsor, by the way. Not yet.
By the way, I originally just said sandwich. I did not.
Yeah, I think.
Somehow we've settled on Jimmy John's.
Keep going,
So
Ryan. Sorry.
Yeah, so the last use case is deposits and transfers. So why can we target such a large range of use cases? Does that not represent like watering down the startup? Why don't we just pick one? Well, the reason that I'm not willing to just pick one use case is the following. First, I don't know which of these kind of 4 or 5 use cases might end up being way bigger than the others. I don't want to overcommit too early. I think they can all be useful. Second, the core payment technology is 90% of the work, and maybe 80% minimum. And then over the long term, you're doing 3% work to support donations, 4% work to support point of sale, but most of it remains this core technology platform. And that's something that other payment startups see today. It's very, very common for other payment startups to support a range of different use cases because they experience the same phenomenon where they go, they run a marathon to build a payment system,
Like a
and then it's
product
like,
fit.
yeah. But this brings me really to the most special thing about 3cities. So the second most special thing about 3cities is that we do this intent dual system where we search all the chains and tokens and try to make it delightful and automatic. I like that. But the thing I like most about 3cities is that we aim to be a neutral utility. So today, 3cities is decentralized, but it's also closed source. So every time we release the app, which is a pure IPFS single page website, that compiled application, which is 100% of what you need to run 3cities. There's no server, there's no nothing. You just need an Ethereum node and this IPFS website. We deploy it to IPFS. So anybody can use 3cities forever and build an integration based on it without relying on our company or our 3cities XYZ domain name. So
James Farnley would be proud.
Oh, thank you. Oh, yeah, I've spoken to James. And so I'm very happy about that, but it's not far enough because we're closed source today, and we're just early stage. Parts of the code base are embarrassing. We haven't, done our first round yet. It's just not the right time to open source, but it will be soon. And so when we open source, all of a sudden you have this payment system that seeks to be as polished as Stripe, which seeks to unify payment fragmentation on Ethereum and all the little death by 1,000 cuts. And now, for the first time, if you're Kraken or you're Coinbase, you can make a superior deposit experience in like literally 2 or 3 lines of code. You're just including the 3cities code base or the 3cities SDK, and then you're passing it the parameter of the user's deposit address, the target chain, and the target token or currency. And then, there are other advanced preferences that would be very useful to them, like webhooks and redirects that we already support today. And then that's it. Right there in Coinbase, 3cities will draw a modal using the same secure iframe technology that powers online banking. And you just be able to connect your wallet or connect your mobile wallet. And that's your pull request into your wallet. And so once 3cities is open source and Coinbase and Kraken can verify the code base and be comfortable with our engineering approach, we actually give them a 2 to 3 line integration to level up their deposit experience. And that's really just a start. So we're pretty excited about it.
Well,
I think it's wild that we can say, hey, I'm going to take Stripe and PayPal and replace it with a 2-man web team. Welcome to Web3, people, right? Think about how crazy, ambitious, and insane that sounds. Like multi-thousand person company, multi-million-dollar company. It's like, nah, we just need Ryan Beckerman for like a year. We'll crack this one out, right? Welcome to Web3.
So
yeah.
So Ryan,
I'm so excited for that.
Ryan, Logri the Bard's website is tokenomicsexplained.com if you want to bookmark him. He's been a great contributor for the EVMavericks podcast. I kind of consider him a wingman on the technical stuff at this point. I was going to see if there's any other things you want to add, Ryan, and if there was any other questions from the peanut gallery before we move into the Doots.
Just with a closing note here, Logri, I would love for you to use 3cities to accept donations when we launch the donations tool. It's not ready yet because right now 3cities only does fixed payments. So you actually have to specify how much the checkout is for. But in a future update of 3cities, it'll become possible for the user to not only pay what they want, which is kind of a donation where you say, I'm going to do $30, but also 3cities is going to search the person's wallet and suggest to them what they should donate. Which it'll give them a one-click. Beautiful.
I'm willing to take a weekend if you are.
Oh, thanks, man. Hopefully, it'll take you like your morning coffee, and then you can get on with your weekend in a 5-minute integration.
No, I'll probably fly out to Cayman Islands and hang out with you for a weekend. We'll just do it then.
I'll barbecue, man. Let me know where.
There we go.
Yeah, I need an excuse to use the kayaks. You don't get much kayaking in with toddlers and small children.
Oh man, how old are your kids, by the way?
Oh, just 1 and 2. It's a circus around here, but we love it.
Oh, I've been there, man. 2 kids under 2 in diapers is those days are pretty long. Yeah. So
Well, I have an incredible home team, and
that's awesome.
Yeah.
Well, good on you, Ryan.
You seem surprisingly well rested. I'll give you that.
Yeah,
well, a very incredible home team.
You know, we thought that replacing PayPal or whatever was going to be difficult, but to find out he's doing that while he's got 2 kids under 2 in diapers is you're a rare bird, my friend. Hang in there.
All depends who you marry. All credit goes to my wife. She's she used to work a salaried 60-hour week HR business partner job for a large American blue chip tech company. And
now she works harder.
Yeah, now she works harder. Yeah, it's incredible. So really, really great setup we have down here in Cayman Islands.
Well, congrats to you. I think now we're going to go ahead and pivot on to the rest of our show. Thanks again for joining us. You're more than welcome to hang out and be a color commentator. Basically, the way this works is I read Reddit, so you don't have to. And we look and reflect on the week that was in Ethfinance. So I'm going to go ahead. I'm sharing my screen, and I can shut off the Lattice one. Also not a sponsor, but my favorite hardware wallet ever made. So looks like Benito 2030 discusses why solo stakers solo stake. And it's a pretty long post. I won't read all of it. This comment was the fuel I needed to tweet about Ethereum today. Thank you. Some days ago, Superfizz said that. And then he went on to post something else. It was a screenshot. Did I hit the button? Yeah. I really believe that the APR are not really relevant for potential solo stakers. So this was Benito's previous comment. There's also the reason why there's nearly no other ecosystem that's even trying to add solo stakers. Solo stakers are not economically rational. Okay, so then Superfizz called out Benito 2030. He's a Duder 76, by the way, which led to a lot of comments saying that post is stupid, and I don't blame Fizz. Still, there's some context missing, so let me try to structure my thoughts once more and add some more arguments. In the end, I started thinking about this months ago. It wasn't just a random rant. Well, it probably was, but there was some more to it. It started with a Bankless episode featuring Justin Drake and Domo Theus. Back then, Justin Drake basically referenced Homo economicus to explain his thoughts on staking, MEV burn, and I think also decentralization. I understand why he did that. Also because of the discussion we had back then, which sadly I can't find right now, but I'm not sure I necessarily agreed with his takes. Why not? And how is it connected to my post? And my post is a reply focusing on this quote. To be honest, with this low level of APR, we'll have a hard time convincing anyone to solo stake. When I said APR is not important for solo stakers, I meant it is not important for those deciding if they want to stake with a pool, aka LST, or if they want to solo stake. There are, of course, a lot of differences. There's no setup cost for LSTs versus setup costs for hardware for solo stakers. The percentage for the LST pool, cost run a validator, etc. This opinion is based on my own experience and anecdotal evidence from this sub, Twitter, of course. I can't speak for all potential solo stakers out there, but I think there is, at least it is fair to question that APR is the most important factor. APR is, of course, important. Financial incentives are central when it comes to blockchains and cryptocurrencies. Yes, I also want to be rewarded for my services securing the ecosystem, but it's not everything. Or in other words, if it was about APR only, there wouldn't be any solo stakers. But why are there solo stakers? Let's see, solo stakers, this is part of the quote again. Solo stakers are not economically rational. We are a different breed. We are ideological rational. Our reward is a censorship-resistant, decentralized network. And then it goes on from there. The last paragraph, I believe we need to make staking easier, eliminate technical entry barriers. that will really have an impact on our solo staker participation. It is effing scary to solo stake. APR doesn't matter when it comes to deciding for or against solo staking. What really matters is what you believe it has a positive influence long-term on the network, and that you feel like you can manage the validator. I'm going to take this opportunity to let everybody in this room know that I got done with the first milestone of Rocket School videos. I see Austin ST in the audience here. So, yeah, we're trying. It's not solo staking necessarily, but it is a movement towards at least a more decentralized staking versus some of the alternatives out there. But okay, so yeah, Benito 2030 and the interaction with Superfizz. That's a really good explanation of what he meant by that original comment. If anybody wants to chime in, I'm going to get a drink of water.
You know, one thing I hear sometimes, JT, is people say, "Hey, why would anyone stake their ether if U.S. Treasuries are at 5%?"
Oh yeah, right.
Yeah, and they say, "What? The yield's lower than Treasuries," and it's like, well, my man, but it's in ether. It's in ether. So it's like, staking is what you do when you already believe in ether and you're looking to do a little more. And I see solo staking as exactly that. Like, everybody wants to help our community. We're all community members, and for some people, running home staking is a really great way for you to help because you're a hobbyist, because you want to learn, because you're an expert, and it's easy for you. And hopefully, it's easy for everybody. And so, like, when I agree with the people who say home staking is not about the APR. You don't stake at home for the rate. You stake at home for the principal. You stake at home to make sure that our ether remains, the best risk-adjusted investment in the whole world. Because, like, if we're not decentralized, that's our main thing. We need that. There's going to be a lot of high TPS execution layers. Being decentralized is our whole deal. And so when you stake at home, you're supporting the value of your principal even more than your yield.
Very
well. Yeah, in holding a principal, there's always a price risk of that principal, but it's largely perceived by anyone who would consider staking to begin with that the price risk of ether is kind of like negative. Like, it's more likely to go up in price than down. So if you are holding USD bonds, like, yes, it's not going to go down, but it's also not going to go up. The people that tend to be in this ecosystem tend to believe that USD is not going to, that inflation is going to eat away at the buying power of USD, and ether will outperform in the long term. So part of the reason not to hold USD is you're absorbing the collateral risks of USD. And the other thing I'd say on that is,
there's no supply control either.
That's what I'm saying. That's the collateral risk of USD. That can print another trillion. Your buying power is going to erode, and that it's not reflected in a decreasing ratio on USD per se, like that against itself. But in terms of what you can do with it, the collateral you're holding in a bond is USD, and that is going to that is a risk you're absorbing. The next thing I'd say is, yes, the APRs are low right now, but we do have this restaking thing coming online sometime this next year, right? And who knows when you start stacking data availability use cases and Oracle use cases and things like Gelato, these sort of function as a service approaches, watcher system, keeper systems, and things like Filecoin can be replaced with data availability systems. Other networks like L1, the collateral they're using for staking, can get replaced with ETH. When you start stacking all these use cases together, right, you might start to see APRs that are 5%, 6%, 7% and outperform bonds, even with, 1 million validators. We might get to a point where the network really has to start saying, there's too many of you. Not all of you can be active in staking at the moment because we just can't keep up with the networking overhead while doing commodity hardware, right?
I think the price is the price of Ethereum is going to be a way to, I can't imagine that the price always remains low enough that people just don't sell. There's always, I'm assuming that's going to be kind of the leveraging mechanism of when people unwind validators. All right, good stuff. Moving on. Prawnholio keeps us in the loop with their efforts to get crypto recognized as an asset before getting a home loan. Oh, I remember this. Some of you may remember, by the way, Prawnholio is a 31-time duder. Some of you may remember that a few days ago I asked about documenting my non-custodial crypto to get pre-approved for a new home loan. I got a variety of answers and suggestions, including some that said income was more important and the crypto wouldn't make a difference. After some back and forth with the lender, just thought I'd follow up to let you know that we were told that the crypto would make a difference for the maximum sales price of the home, and that we could document it the following way. Number one, document ownership of funds. Please provide documentation that funds deposited into your crypto address came from your accounts. Whew. Number two, document that the secure signature is under your control. For instance, sign a message from the address. For what it's worth, they go on. We were told we could avoid steps 1 and 2 if we sell to USD and put it in our bank accounts for 2 months and 2 bank statements so that it is seasoned. Because putting together the address history with airdrops is going to be a huge pain in the ass. That's why we may end up doing in the long run, especially since we have not gotten close to finding the right house yet. Man, if you're not looking for if you don't have the right house, I mean, yeah, get this stuff in order. But with my lender and underwriter, it is at least possible to self-custody and have those assets counted towards your overall loan value. It will absolutely vary from lender to lender, of course, but we are very pleased with what we've heard from ours. I feel like we almost certainly would have gotten a different answer 5 years ago. You can also shop around. This is me speaking now. So thank you, Pranholio, for that submission. You should be shopping for different banks if they're going to be poking into, everything that you own. I think the idea of seasoning the USD is a fairly common tactic, though. I don't know if anybody else has
I love how
anything to
ridiculous
chime
the
in.
idea is. If I stole and I laundered money, as long as I can keep it in a bank account for 2 months, now it's considered legit.
Seasoned.
Yeah, totally. Yeah, that's the proof that we need in the financial system, not a ZK proof or any type of actual mathematical anything. Just no, I managed to steal it for 2 months and get away with it. Now I can get a house.
Yeah, no shit. It almost seems like that's the bank covering their ass,
It's not covering anything. It's just ridiculous bureaucratic bullshit. It's not actually adding any security. It's security theater. It's inconvenience without actually accomplishing any good.
Moving on down the list, unless Ryan, you want to add to that?
Reminds me of taking my shoes off in the airport.
Yeah, exactly.
Awesome. Turkey Troll discusses an interesting carbon market ERC20 token. This is a long one. I won't read it all. This one is for those of us here who foresee the looming threat of climate change and want to help change our economies for a more prosperous future despite short-term pain. If you're one of those people who just want economic growth, then I can't blame you for wanting to milk the fossil fuel paradigm for all it's worth. Oil is like heroin, incredible in the short term, but it will be our demise if we don't get something clean sooner or later. Anyway, I recently stumbled upon a pretty neat project based out of New Zealand called Carbon Linked. And there's a link here. It's pretty simple, really. It's just a token, which is tokenized NZUs. I don't know. A token NZC, which is tokenized NZUs, New Zealand. I don't know. Which is the right to emit carbon in New Zealand government's carbon emissions trading scheme. This scheme mandates all large businesses, excluding the agricultural sector, must obtain and then surrender NZUs to the government for every ton of carbon emissions. Currently, the government auctions off a set amount of NZUs regularly based on New Zealand's long-term emissions reduction goals as per international agreements. This auctioned off supply is constantly shrinking. I'm going to keep going on down. So what can be achieved with this? Well, recent research suggests that the cost of 1 ton of equivalent CO2 emissions has a future cost of roughly $180 US dollars. Yet NZUs and other government regulated carbon markets currently sit at around $40 to $50 a ton. Is there a potential for GME moment? The crypto community and environmentalist community rallying around a meme to pump up the price of carbon in carbon markets to a more representative cost. My initial hesitation is that at the end of the day, at least with New Zealand use the units, I guess, the government can step in to increase supply as speculators take over the market and impede a nation's economy. On the other hand, if this idea has legs, a small yet progressive country like New Zealand would be the place to start. And it goes on from there. Regardless of what you think, it seems like an interesting investment opportunity at current carbon prices to front run the ever increasing cost of climate change. I know once this bull run is over and I'm looking to take profits and diversify, carbon will play a role in my portfolio as an economically viable yet also ethical investment. It says it's more of a speculative discussion starter than any solid ideas. I think the carbon, this is just me again speculating, but I think the carbon credit idea, like, we're still doing damage to the environment. Now you got to pay somebody money. And what does that money go to? Does it help? What do they do with it? Like, put it in their pocket? Say, yeah, go ahead and trash the river. You know, I don't know what the, that whole thing just kind of, I'm just ignorant of where the money goes. Oh, look, Chaz Schmidt replied. Chaz Schmidt's a good friend of mine. Very good. So I don't know if anybody has anything to add to that, but like a tokenization of carbon credits to help avoid price pumping. I'm trying to figure out. Looks like there's a difference whether it's a U.S. dollar carbon-based credit or a New Zealand side is much cheaper. I don't know. Thank you, Tricky Troll. I'm just going to go on. Nomad, let's see. What is the title here? Thank you, A-Word, for putting these together. Nomad Nuance has a great question about MEV. Ooh, and then Harog has a great answer. By the way, I see Harog's name on the Weekly Doots list twice. This guy's on fire. So the original question by Nomad Nuance, who is a 3-time duder, why don't validators just start stealing all the MEV? A validator would get the best blocks from MEV users, and the validator could try to puzzle out what they did to make money. And whichever made them the most money, they could execute themselves across several strategies, even that you didn't even have to come up with. You just have to copy and steal them. It's like MEVing MEV block builders. Why propose an MEV block where you altruistically let them make money when you can steal that money for yourself? I guess that's what I'm asking. Harog says because the MEV boost protocol is designed in a way so you cannot do that. If the validator signs a block, they do not actually have a block to sign off. They only sign off the hash of a block and publish that. Only then MEV boost releases the block and publishes the whole block to the network. The validator can only see the block once it has been signed off on. No way to steal the MEV then. Half a year ago, one validator was able to exploit the MEV boost protocol by signing off on the hash, receive the block, and then change the contents of the block and sign off on the new one and publish that one on the network. They got slashed as they signed off 2 different blocks. But it worked for them as a manipulated block made it into the chain, and they could extract way more than they lost due to slashing. After that, MEV boost changed their protocol slightly. After that, MEV boost changed their protocol slightly and added a delay to wait a few seconds before they revealed the block to the normal users. MEV Boost does publish the block to the network themselves first, and the assumption is that once the validator sees the block, most of the network has already accepted it, and no one can change it anymore. Since no other MEV Boost exploit has happened since April, the mitigations seem to have worked. Harog, you're awesome. Keep helping being a great teacher out there, dude. 34 times on the dudes list. Harog with the banger of a reply. And also a great question by Nomad. And then Harog, that's it. Okay, going back. Benito 2030. Oh, on the weekly 3 times. Benito 2030 outlines the increase in profitability of running a Gnosis chain validator And Harag explains where the extra income is from. Benito 2030. I've run a Gnosis validator since 6 months more or less. First 5 blocks proposed. One with 0.01 XDI tip, 4 below, one with a less than that. Okay. Last 5 blocks, one with a 0.023 XDI tip, and 4 above 0.07 XDI. The best tip was 0.31 XDI. From basically 0 MEV to an average of 10 cents per block. Activity is picking up. Blocks are fuller. People are transacting more. Makes me bullish. And this is not about Gnosis or GNO, but more a general sentiment with some data that I check regularly. Harag replies, since about mid to end September, NFT spammers have discovered Gnosis chain. They send millions of ERC 1155 NFTs to addresses, directing them to try out this amazing new DEX. They pay quite a bit of XDAI to send those transactions. This XDAI ends up in your wallet, pushing your APR from currently around 13% to somewhere between 15 to 20%. In the last 2 weeks, I had days where the execution income was over 50% of my consensus income. Quite a nice boost in APR. These additional transactions increase the CPU resources of any node. Interestingly, the professional stakers like Stakewise and Clarios have had issues in the last 6 weeks keeping their nodes up and running. Apparently, they are running their Gnosis nodes at the edge of starving themselves of resources. One small uptick in resource usage and their nodes seem to go down. They have missed quite a few proposals and attestations. This obvious transaction spam scam is enabled by the ridiculously cheap block space on Gnosis chain. At the moment, there is a plan to reduce the block size from 30 million gas to 17 million gas to force these spammers to pay slightly more and maybe reduce the spam a bit. Any Gnosis operator can be part of this vote by putting the commands from the links into their node configuration. Okay, very good. Excellent. Thank you for that awesome explanation there, Mr. Harog. Sourdough Pretzel 4444. I love these names. User Sourdough Pretzel 4444 has the TLDL of the Bankless episode about coin. I don't know if any of you guys heard that episode. I found it to be interesting. The TL didn't listen. Bankless on coin. Primary revenue drivers are perps, exchange, and crypto loans, not sequencer fees from Base or custody fees from the Bitcoin ETF. Base, although not a good initial revenue driver, is a hedge on the bear scenario for the corn, the one where DeFi eats its shit. Retail exploitation is the lion's share of transaction volume revenue. BTC ETF custody will increase revenue marginally, but will indirectly drive institutional trust that will lead to increased volume, hopefully in the future with perps, loans, and on Base. Coinbase staking, here's another point. Coinbase staking share will likely increase as new users flow into crypto. USDC interest was a giant share of income and will likely continue to be as rates stay high. If rates go down, transaction volume will likely go up, benefiting Coinbase, the money printer, yada, yada, you know the deal. Interesting things to look for. Will Coinbase increase their staking fees, essentially discouraging staking to encourage decentralization as their percentage stake goes up? Will Base continue to see increased adoption despite not having a token but also WIN token? Will perps on Coinbase be successful despite Coinbase not having a very popular opinion amongst traders? Will Brian Armstrong continue to remain bald? Dun, dun, dun. All right, bullish on coin. And so that's the Bankless. The TLD didn't listen of the recent Bankless podcast. Good job, Sourdough Pretzel. Thank you for your contributions. Moving down, unless anybody has anything to add about Coinbase and being bullish on coin.
I'm certainly bullish on Coinbase. base is incredible. I think it's a harbinger of lots of new corporate and exchange L2s. Really exciting times. JT, I actually got to bounce. I have a call in 10 minutes I have to get ready for.
Ryan, thank you so much. Follow him on Twitter at Ryan Berckmans. Get on 3cities.xyz. Keep your eyes on the prize, man. Ryan, congrats to you. Keep rock and rolling. And we hope to have you on a future podcast when you wipe out Visa and PayPal.
Thanks, man. Can't wait for that day. I really appreciate you having me on the show. Have a great day. Bye.
Bye. We'll see you. Glad he could make it on. That was really sweet. I enjoyed that. And thank you, Logri, for helping to ask some good questions. Benito 2030 is asking badge holders to vote for the next Optimism retroactive public goods funding round. All right, Benito on fire. Yesterday, Optimism retro public goods round 3 voting started. Badge holders have about 1 month to vote. This means that it's not delegates who are voting here, but a different group of 208 people who received a badge in the past. Badges? We don't need those stinking badges. There are some community members holding a badge like Superfizz, Nixo, Minimal Gravitas, and User Web of Trust, and probably others. You can find a list of all eligible projects at a link here. As stated, people are not voting in their capacity as delegates. So this is not a typical governance situation. All right. Hope others will follow. Thank you, Benito 2030. Timmerweb discusses the rise of fake AI-generated content and where crypto comes in. I used AI to grow this beard, by the way. It's No Shave November, and my kid said, type in GPT, give JT a beard for this month, and boom. It's just amazing. You can get that out of a robot these days. Okay, edit, I guess broadly what I'm going to talk about. Okay, so he made it. The rise of AI modified or generated content is hard to miss. Sometimes it is not at all obvious. The Yahoo Finance conference today was a pretty interesting and showed AI video from Runway, the CEO, which basically said the target was to make AI video generation available to everyone, and it's moving at a ridiculous pace. It's easy to imagine a digital world so full of fake content that it becomes hard to trust anything. Yes, I've been saying it, and I know everybody in here has been paying attention to this. I mean, for me, it was like last year when Bankless was interviewing the guy that was super bearish, and it was like it really affected Ryan and Sean. They had to like unwind a bit about that, and that was last year. Anyway, I think the threat of overwhelming fake content from AI is the most immediate risk it poses at this point. However, defense against this stuff seems to be lacking. Together with presentations from CEOs telling us how great their tools are, where are the presentations from people showing us how rampant fake content can be recognized and contained? Tumbleweeds. In the face of this threat, it's hard not to imagine an eventual future where almost all digital content is something like an NFT, whereby an application layer can verify its originator without verifiability through Web3 or whatever that looks like. All content gets ignored as fake. Of course, this doesn't solve the problem exactly. It may still be fake, but the point is you could verify various aspects of the content, who is posting it, etc., and make a judgment. Perhaps this is, but like Gitcoin Passport. This seems like the kind of hostile operating environment in which a secure, decentralized blockchain would become essential. And then it goes on with an edit. I'm not going to read it. I think we collectively in this group of intelligent people all understand the threat that AI poses. I was actually thinking about this this last week, man. I had to replace a furnace, air conditioner, hot water heater. I've been mopping up sewer water. Anyway, so I had my headphones on. I'm just sitting there ruminating and working, and I'm thinking to myself, you guys remember when we interviewed, oh God, who's the guy from Intuition? His name escapes me off the top of my head, but Intuition was that kind of like a tokenize everything. I got to thinking about like a regulation on AI might involve the blockchain, meaning that if you generate AI content, it generates a token that by law has to be imbued into the generation, whether it's video, music, audio, or any visual asset. And so like websites would be able to find the token and tell the user this is partially AI generated or completely AI generated. And then it has a block time to it, right? So I don't know the exact way that I'm trying to articulate this, but if we're going to use this AI shit, I think there needs to be some accountability that says that AI was used in the implementation of the asset. And if it goes out there and it doesn't have a token writing with it, it's out of bounds, right? In the eyes of the of Big Brother, so to speak. I saw the have you seen the Greta Thunberg deep fake of her being on a morning talk show? It's a deep fake. Look it up. Greta Thunberg. It was a green warfare. And they had the AI put her in this set, like a Today Show set, with two other hosts sitting on a couch across from her. The whole thing is fucking fake, pardon my French, but it was so alarming. There's so many stupid people that couldn't have figured it out in the first 15, 20 seconds that it was fake. It was that convincing. It was for me, I was listening to it, and that's how I figured it was satire, because she says, we need to use vegan hand grenades. It's the funniest skit, though. I mean, when they were slick, because the first 15 seconds, you were kind of caught off guard, like, what is this shit, right? Like battery powered jets, like we can. If we're gonna go to war with each other, we need to do it in a greener way. And here's some ideas. We have this technology. We can do this. But for people who just don't have a lot of good critical thinking skills, imagine how easy it is to like fool entire groups of people in 30 seconds on Twitter that something is completely true when it's not. And it's just, God, we're such a lazy society on finding the truth.
It's way worse than that, because the ability to create believable false, like deep fakes, etc., is going to make this way worse, right? Because seeing is not even believing anymore.
That's right. That's right, man. I'm so, like, I told my kids, man, learn how to work with your hands. Like, I don't care if you're an air conditioner, heating and air guy, or you're just, I don't know. But of course, all the same things were said about, the tractor's going to replace the horse, and or whatever. And in ways it has, but we still have horses, and the telephone is just going to ruin us, and the television is going to ruin us. And it's like, I don't know. We got to get the other side. There has to be a market that's profitable for detecting bullshit. And we need it. We need it now, because the narratives is so easy to play out AI stuff on a screen, on a phone, which is what most people use, right? And you can't, I mean, if you blow up AI generated content video right now, on a bigger computer screen, you can kind of see the imperfections of it a little bit, but on a cell phone, it's nearly impossible. I don't know. I'm preaching to the choir. I'm going to keep moving on. I'm going to wrap this up. VDRAN, what's up with the ARB staking proposal? And Set One Less explains what it's all about. VDRAN, Deuter number 16. That's great, man. Arbitrum DAO approved proposal to activate token staking. I'm not sure I'm the first one to ask this. Where does the yield come from? If this is the first step in making block sequencing permissionless, meaning future sequencers would stake ARB token and receive the yield, well, that would make sense. But you would have to squint really hard to read that from the proposal. The way the proposal is written sounds that the Treasury has way too much money and is distributing it to token holders who are willing to lock ARB for a certain period of time. I may be old-fashioned, but in my opinion, yield should come from something useful, like proposing blocks or creating liquidity. Bob Rossi, 37-time Deuter, when you have the time, could you please shed some light on the issue? And instead, Set One Less chimes in. The DAO didn't approve anything yet. The temperature check has passed. Still, expect this to be shot down on-chain vote. If the Arbitrum DAO is being hijacked by Ponzi schemes like Plutus DAO and siphoned away by greedy governance delegates who have teamed up to raid the DAO. Plutus DAO is the creator of the bullshit staking proposal that is solely to benefit their bullshit PLS ARB token that has lost its peg a lot. There is yet another proposal for $2 million to establish a, quote, Arbitrum coalition to fund Blockworks, also including $600 per hour to review DAO proposals. Proposal may be made by Blockworks for Blockworks, not even attempting to hide the conflicts of interest. If people are still delegated to the likes of Plutus DAO, then they should really reconsider, in my opinion. And Bob Rossi responds to that, hey, so I haven't voted on the coalition yet. Curious if you or anyone else has additional thoughts on it. I'm always open to what our Ethfinance feedback is, as that is ultimately the group I'm hoping to represent the most in this, as I know a lot of my delegates come from here. And the conversation continues. Man, this is great. You're seeing like DAO wars within DAOs, huh? Interesting. And finally, Weimar How deployed a cool smart contract to help you get the scroll airdrop. As the vision of great shaman Hanniabu manifests, it's time to share the love of Zombo to all. And there's context. Zombo.soul has been deployed on Scroll mainnet. You can do anything with Zombo.soul, anything at all. The only limit is yourself and gas fees, and there's a Scroll scan address. What does this do? If you call the do anything function with the value of 1/10,000th, Zombo.soul will 1. mint you 1,000 Zombo tokens. 2. deploy a new Zombo token contract titled Zombo X, where X is the number of Zombo contracts deployed. If you were the fourth person to do anything, this would be Zombo 4. And then step 3, disperse Zombo X tokens to everyone who did anything before. The infinite is possible with Zombo.soul. The unattainable is unknown with Zombo.soul. Why would you use this? You may have heard Scroll is running an NFT campaign for contract deployers. This lets you qualify in a couple of clicks. The window for the highest tier of NFT closes tomorrow. And then there's an eligibility thing. Most importantly, you get to contribute to the ever-growing expansion of Zombo token contracts. Are there any catches? Yes. As you may have guessed earlier, I'm taking a fee of around 19 cents for sharing the love of Zombo with you. My goal is to become a billionaire by getting all 7 billion people on Earth to use Zombo.soul. Note that the contract deployment will cost you about $1 in gas anyway. This is Zombo.soul, and welcome to you who has come to read about Zombo.soul. The only limit is yourself. Weimar How. Thank you. And there's some good responses there. Tricky Troll says, screw Reddit for removing Reddit gold. This is my good man deserves many a gold. I guess you'll get 19 cents of my ultrasound money instead. Stake it wisely. All right. Very good. Okay. I'm going to go ahead and wrap up the show. Thanks so much for hanging out. Big shout out again to Ryan Berckmans. So glad you could make it on. So stick around after the live stream because we continue the party in the hotel lobby on Discord for a bonus hour of popcorn. It's a fun place to let loose when the parents aren't watching on YouTube. Hi, Mom. On behalf of Ethfinance and the EVMavericks DAO, my name is JT. Cheers and big hugs from Kansas City.